Hello, all of you. I hope you all are doing good. Today, we are going to revise accounting standard 7, that is construction contract. Okay. So there are so many things that we are going to cover here, but simple, don't worry. As you can see that here in chapter roadmap, that introduction, then what is this percentage completion method, types of construction contract, that is fixed price contract, cost plus contract, reliability of outcome estimation, unreliable outcome estimation, accounting of construction contract, what do you mean by contract revenue, what do you mean by contract cost, calculation of percentage of completion, calculation of profit or loss. Then how to prepare contract profit and loss account, then total contract, if expected to exceed the total contract revenue, then what should be the accounting treatment in that case, accounting treatment of miscellaneous income, then uncollectible contract revenue, combining and segmenting construction contract and disclosures. There are so many things, but don't worry, it is very simple. Okay. Now, before we come to that, what is this percentage completion method and accounting and all that, very important thing. Why this? Always ask, why is the need of this accounting standard? So, as you can see that construction contract, why you think so that there is a need of these accounting standard? The reason is that generally when we do the construction, whatever, it takes more than 1 year, a longer period of time. So what happens, suppose a contractor who is doing the construction of this building. Now understand this point. Okay. Accounting standard 7 talks from the contractor point of view, not from contractee. Okay. Contractor, the person who is doing the construction, that is. Now understand. So think from the contractor point of view. Because for the contractee, this building, it will be PP for property, plant and equipment. For contractee, it will record it under accounting standard 10. But for contractor, it is going to be recorded. It is revenue for him. Okay, so it is going to be recorded under accounting standard 7. Now understand this point. Why the need of AS7 that is? As we know that the construction contract take longer period of time. Obviously, very rarely it might be even less than 1 year, but generally it is going to take more than 1 year, the longer period of time. So now the question arises how to recognize the income and expenses that here. Because suppose the construction contract to do the construction of the building and the price is decided, let's say 100 crore. Okay. Now what happened that the price is 100 crore, the revenue is decided that. But when to recognize the revenue of 100 crore? Because the construction is going on for next 3 years. So when I say the construction is going on for next 3 years that here, how to recognize the revenue by the contractor that here? Because it might be happen that here now, they receive the revenue advance amount from the contractee in first year only. So he will recognize more amount of revenue in first year, but expenses they are going to incur in first year, second year and third year. So in first year, the huge amount of profit, but in second year, third year, there might be loss or less amount of profit. Vice versa, it might be happen that the revenue we are going to receive from contractee at the end of the construction that year. So once construction has been completed, then only we are going to receive a amount from the contractee. So I will recognize expense first year, second year, third year. But revenue is going to receive in third year only, suppose that year. Okay. So first year expense recognized, no revenue, loss will come. Second year also loss will come. In third year, suddenly when you receive the revenue of these 3 years that year, of this complete construction that year, you are going to recognize the revenue. Then huge amount of profit will come in third year. So this is the problem here. So when to recognize the revenue, that is what accounting standard 7 deals with in the books of contractor, not contractee. Okay. For contractee, this building is PP, property, plant and equipment, that is going to recognize under accounting standard 10 for contractee. We are discussing from contractor point of view. So there is one method which is suggested by this accounting standard 7, which tell us to follow, and we call them percentage of completion method that here. What is this percentage of completion method? We will discuss how to do accounting. Each and everything I will discuss with you. Just listen me carefully. Okay. Now, introduction part that here now. So A7 prescribe the principle for accounting of construction contract in contractor's financial statement. Remember, in contractor's financial statement that year. Okay. Focus on revenue recognition, how the contractor is going to recognize the revenue in their books of account, and applicable only to contractor, not to contractee, and not to general service provider. Okay. Also that here, generally service provider also not covers here. There are certain exceptions. I will come to that. For example, chartered accountants. Okay. When we provide a service, we are going to cover under accounting standard 9 only, revenue recognition. Okay. So they say here, but what it includes that there are services which are directly related to construction, like the project management that here, okay, architect services. These are directly related to the construction. Therefore, that service also covered under accounting standard 7. Now they say contract for destruction or restoration of asset and the restoration of the environment following the demolition asset. Now, what does it mean that here? They're saying the destruction of the asset is also covered under the accounting standard 7. We know the construction of building is AS 7 that here, but destruction of that asset is also going to cover under accounting standard 7 that here. Okay. So they say, for example, H, a sole proprietor enters a contract with DM Construction to demolish his old office premises. Since AS 7 covers contract for destruction, restoration of asset, this demolition contract will also be treated as construction contract. Okay, so remember that not just the construction, demolition also is going to cover under accounting standard 7. Now, as I told you that here, we face a problem that what does it mean? What problem we are facing here? How to recognize the revenue that here? Suppose this is I'm contractor, I'm doing the construction of this building that here. Okay, so when I say I'm doing the construction of this building, it is going to take me suppose 3 years to complete the construction. First year, second year, third year. When to recognize the revenue? Because it might be happen I am to receive the amount from the contractee at the end of the third year. But it might be happen that I will receive amount at the starting of the first year. Okay, we don't know what type of terms and conditions we have with the contractee. So when should we recognize the revenue that year? Because expenses we are going to incur in every year that year. But revenue when we have to recognize, so there is a one method, we call them percentage completion method. Okay, so how much the work has been completed that year, only that much percentage of work revenue should be recognized and cost should be recognized in profit and loss account of contractor. So I will come to the method of how to calculate these percentage that year, because if suppose 70% work has been completed, so we have to recognize 70% only. Okay, so I will tell you that here. There is a proper format here. The table is also that here. Proper steps there. I will explain you that here. How to prepare the, I mean to say revenue should be recognized or expenses should be recognized in each year that I will tell you, don't worry. But what is this percentage completion? They say that here now. The use for the long-term contract that here now. Recognize revenue annually based on the progress of work. How much work has been completed? Suppose 30% work has been completed. So we are going to recognize the revenue only the 30% that here. Match with the corresponding construction cost. So I will tell you that here how to calculate this percentage, which is important that here. I will tell you there are some methods of it how to calculate. I will tell you that. Okay, it will come later on. Here only, I mean today only these accounting standard it will come that here. Okay, the percentage how to calculate. These are formalized. I will discuss with you. Okay. Now it says that here use cautiously to avoid profit anticipation, reliable estimate needed of the outcome of the contract. Correct is that. Now what happened? We have to use this method very cautiously. The reason is that here now, if you're not calculating properly, so the revenue you have not recognized correctly and the cost as well that here, and the profit will not come correct profit. So in that case, it might be happen that here the loss may come, or we have shown more profit. So we may declare the dividend that we have a huge amount of profit. It might happen that. So we have to use this method very cautiously. There should not be any mistake that here. Otherwise the profit will not come correct that here. Now there are two types. I will come to the how to calculate this percentage. Okay. Now third is the types of the construction contract. There are two types of contract. First is a fixed price contract. What happens in case of fixed price contract that here? Generally it is not for so long term. It's a regular in nature that here. So we know that here how much cost is going to be incurred for that particular type of the contract that here. Okay. So under the fixed price contract, we enter into contract with contractee which with a fixed sum. We may include some additional clause for the compensation for these escalation. If the price will increase that here, so we may say the 5%, 10% might be happen depend on the terms and condition that we have with contractee. Okay. The fixed price means we decided the amount, let's say the 100 crore. We decided the amount, this is the amount, I will do the construction for you and I will take 100 crore for me. Okay. What is this cost plus contract that here now? In cost plus contract, whatever cost I am going to incur, I will do the total of the cost that I have incurred and I will add the specified percentage like the 5%, 10%, whatever the profit margin decided, that will be added in the total cost which is incurred by the contractor here. Okay, so there are two types of contract. Fixed means the amount is fixed, how much will be the revenue. In case of a cost plus contract, whatever the cost that we incurred by the contractor, we are going to add them. What will add them in that? The profit percentage that here, whatever decided by the contractor, between the contractor and contractee. Okay, but it is very important that here now, there should be a proper, as I told you that when we talk about the percentage completion method that here, okay, there should be proper reliable estimate should be done that is. So what do you mean by reliable estimate should be done that here? It means that here, as I told you, there are two types of contract. The first is a fixed price contract and second one is the what? Cost plus contract that here. So what happens in fixed price contract? total contract revenue. Okay, total contract revenue can be measured what? The reliably. Okay, so we should know that here. What should be the total revenue that is generally pre-decided between the contractor and contractee that here. It is probable that the economic benefit associated with the contract will flow to the contractor. Obviously, it is probable that here whatever economic benefit that is flow, I mean to say, we are going to receive the amount from the contractee. Both cost to complete the contract and stage of the contract completion at the reporting date can be measured reliably. What it's saying that here at this point, whatever the cost to complete the contract that year and how much work has been completed, how much I mean to say in percentage form, that how much work has been completed that year, it should be measured reliably. And I will tell you that here we will discuss that this is a method that here how to calculate the how much percentage has been completed. In that formula, we are going to use how much cost actually we have incurred, how much total cost we are expecting that year. These two figures is going to we are going to utilize there to find it out the percentage of work has been completed there. Okay, so this is very important. We should know how much cost has been incurred, how much expecting cost that additional cost we are going to incur. So that will help us to calculate the percentage of completion of work. And then they say the next point. Contract cost attributable to contract clearly identify and measure reliably. So whatever the cost attributable to the contract, we should know how much is the cost for that particular contract that year and which can be measured what? The reliably here. Then it says that here now, when it's come to the cost plus contract, what is cost plus contract? Because that cost plus contract means that here now, how much cost that here we have actually incurred here and how much is why we are with the percentage that decided. For example, 10%. The cost I incurred, suppose whatever X, suppose 100 crores. So 10% will be my profit, cost plus profit. So what should be reliable estimate should be done that when we talk about the percentage of completion method in case of a cost plus contract, that it is probable that here economic benefit associated with the contract will flow that way. The contract is going to receive the amount. In contract cost attributable to contract, whether or not specifically reimbursable, can be clearly identified and measured reliably. The cost can be measured reliably. You know that in point number B, when we talk about the cost plus contract, that they didn't mention about what? They didn't mention about what? The revenue part here. The reason is that when we talk about the cost plus contract, we are going to take the total contract cost and we will add the pre-decided percentage of profit that here. Okay, so there is no revenue that here. Okay, that's why there is no point of the revenue. But when it comes to fixed price contract, this is to contract revenue can be measured reliably. They're mentioning here. Anyways, to be honest, that point number 4 is not so important. That what is important, I will come to that here. Okay. Now, if suppose I cannot make a reliable outcome estimation, what does it mean? I cannot make a reliable outcome that how much will be the revenue, that economic benefit will flow to me. Any of these conditions if not satisfy that here. They might ask you in the examination that here they cannot, contractor cannot make a reliable estimate that. You know, in that case, they say whatever cost we have incurred, that should be that much only revenue should be recognized in profit and loss account in the books of contractor. So what does it mean that here now? Suppose that here now, this is my profit and loss account that here. So when I say this is my profit and loss account of contractor, so suppose I cost are incurred, let's say the 100 crore that year. But if say the revenue recognized up to the cost incurred in contract cost should be recognized as an expense in the period in which they are incurred. I cannot make a reliable outcome that is how much will be the revenue, okay, or economic benefit will flow to me, or any of these conditions if not satisfied, any of these conditions I am saying, if not satisfied that here. So what we will do that whatever cost we have incurred, the same amount will recognize as a revenue. So I will recognize the same amount of, revenue, that is how much? The 100 crore here. You got the point here now? Okay. Now the important things start here now. Okay, what happened that here when we talk about the revenue, the three things is important that here now. What do you mean by revenue that here? Okay, so I prepared this in table form in this book that will help you to quickly understand the concept here. Okay, then we'll discuss about what do you mean by the revenue from under both the contract, fixed price contract and the cost plus contract. That we'll discuss in both of them what do you mean by revenue. Then we'll discuss what do you mean by cost. What do you mean by revenue? Then what do you mean by cost? And then how to calculate the percentage, how much work has been completed, and then how to calculate the profit. So these are the 4 steps we have to follow. How much is the total revenue, how much is the total cost, and how much work has been completed that year now, and then how to recognize the profit in the books of accounts. These are the 4 steps, just you have to listen me carefully. Okay, now what happened is first is when we are talking about the revenue that here, they say total revenue is that here. They say the fixed price contract that here. When it's come to the fixed price contract, it say initially agreed contract price, whatever initially is decided between the contractor and contractee. Suppose they decided 100 crore. So that is the amount of revenue that is. But they say if they put a clause in the contract between the contractor and contractee that increase in the contract rate due to variation in contract. It might be happen that here, suppose now the contractee want, okay, so now the contractee suppose want that suppose this is a construction of the building that contractor is going to be do. Now what happened that in but the contractee later on they change some variation, they have some variation in the contract. They say no, I want a balcony also that here. So there is a variation in the work. So obviously contractor is going to charge for it. So what happened that here now they will add the increase in the contract price that is due to variation. So they will add this amount here. Okay. Now what do you mean by revenue? We're discussing the revenue. Okay. Because there's a variation in the work. Obviously cost will increase, but the contractor is going to charge the revenue to the contractor also. Okay. Now that is the revenue for him. Then they say add increase in the contract due to escalation clause or increase in the estimated cost. Escalation means because of inflation that is. So they will mention in question that here was the 5% inflation in the material cost or labor cost that is. So obviously that I will recover from the contractee. So that we have to add to the revenue amount. Okay. Add any other amount entitled to be claimed. Now, what do you mean by claim from the contractee? It might be happen that I'm claiming some amount from the contractor. Let me give an example. Suppose it is decided that here I am to start a work on 1st of January. So I'm contractor. Suppose you're contractor. So I say at your the site, I will come there and will start the construction of the building on 1st of January. So I come there and on 1st of January with labor, material, and all that. And I saw there that there is the lock on the main, the boundary wall that is there. On gate, there is a lock. So I call you that here. What happened that it is lock here? I decided that today we have to start the construction that day. You said no. I'm here on foreign trip. We cannot start a work today. We'll start after 15 days. But I will tell you that it's a loss to me. Why it's a loss to me that here? Because the laborers are here. Okay, so there is loss. So I have to pay the wages to them. So it might be happen there are certain amount I'm claiming from you or certain amount that I've incurred on behalf of you that year that I will claim from you that year. I will claim from. I pay some amount to the municipality example. I will claim from you. There are certain amount which are claiming from you that year. That is also a part of revenue for me. But obviously at the same time there is going to be cost also. But here we are discussing about the revenue. So the amount that I will claim, additional amount that I will claim for you from you, that is the revenue from the revenue for me. Now they say add incentive for performance. So it might be happen that suppose we decided that here the construction is going to be completed in 3 years, but we decided that if I complete the construction within 2.5 years, example, or 2 or 3 months before the 3 years that year, I am to charge certain incentive because we have done the construction before the time that year. So certain incentives I will take from you. So when I say I'm to take a certain incentive from you, that is what revenue for me that year. So incentive is also revenue for me. But there's the one thing I'm saying the less. What do you mean by less here? We are deducting here, okay, less penalty for non-performance. So it might be happen that you are not doing the, I have not done the whatever pre-decided that here, okay. So there are some error have been done that here or the construction is not done properly that here. So it is also, there is a clause mentioned in the contract that for the penalties that here. So when I say that here, I am not completing the contract or any violation of the contract, the terms and conditions which is mentioned in the contract that here. So there is a penalty on me. So obviously you are not going to give that much of amount to me, so that will deduct it from the amount of revenue, and that's why it is deducted there. Okay, so whatever amount comes at here, what we call them, this is the amount of total estimated contract revenue that here. Now understand, note, claim, what do you mean by claim? It is mentioned that it include only if customer acceptance is probable an amount. I say I am to claim certain amount from you, but it should be recovered. I cannot say it just, oh, okay, I want to this much amount I have incurred, I will recover from you. Okay, but you have to agree on that. Okay. Incentive means include only if the performance standards are probable to be met or exceeded and the amount is measured reliably. Obviously, it is probable that I am to, for example, the construction has been decided that should be done in 3 years. But if it is completed, suppose in 2.5 years, you are going to give me incentives for that. So when I say that here, you are going to incentive for it to me that here. What does it mean that here? Whether it is probable that I am to complete the contract in 2.5 years, if it is yes. So in that case only I am to recognize the revenue of incentive here. Okay. So this is about all these items is going to come in revenue when we talk about the fixed price contract. But what is going to happen when we talk about that cost plus contract that here? Okay. Because it is very simple that here. Because whatever amount is the cost that I have incurred, I will add the profit margin. But you know what this says that here? This is reimbursable cost incurred in the contract. Reimbursable means that the actual cost incurred by the contractor which is recoverable from the contractee. So it might be happen I have incurred 100 crore, but you will not agree on 5 crore. So we are not agreeing on the 5 crore. That 5 crore is not recoverable from you. So I will recognize only 95. Example I am giving. So whatever recoverable from the contractee, that is the recoverable cost. And in that agreed percentage of, I will add the percentage of profit, and this is the total contract revenue. It's the cost plus contract. What the cost I have incurred that is recoverable from you, I will add the pre-decided percentage, and whatever amount comes that I will recover from you. That is the revenue from revenue for me. So this is about the revenue. But when we talk about the recognition, that I will come to the recognition part that here, but we need a revenue and the cost. And obviously in your mind, a question might come that here, sir, but the revenue which you're talking about, that it might come in your mind that it's a total revenue. Yes, correct. It's a total expected revenue that here. So how to recognize on a yearly basis? I will tell you that here, how to recognize on yearly basis that here, because we are going to recognize on yearly basis on the basis of the percentage of work has been completed. So what we will do that here, first we'll discuss, we have already discussed here about the revenue that here. Now we'll discuss with you the cost, and then I will tell you that how to calculate how much work has been completed, that's the percentage, and then I will tell you how to recognize the revenue in each year. Okay, then the cost and the profit in each year. Now I'm coming to the cost that here. We are talking the total cost, not the cost only for a one particular year. Total revenue in point number A, total revenue in point number B. What it says that here now, it says that a contract cost, this calculation of the total estimated cost at the end of the each year. So cost incurred till date. So what is cost incurred till date? I will come to that. It is explained there. Till date, I will come there. Okay. Whatever cost we have incurred till date that here, and further estimated cost. So it might come in your mind, sir, estimation may be wrong. Yes, correct, it may be wrong. So every year my estimation may be changed. It may happen that year, but don't worry that year. I will tell you the steps that your answer will never be wrong. It will always be correct. Okay, I will tell you the steps there. Don't worry. Very simple accounting standard. So at the end of the year, you have to calculate how much your total estimated revenue. Total I am saying. Okay, total revenue at the end of the each year. You have to calculate total estimated cost. The cost that you have incurred and additional estimated cost that you are going to incur. So you are going to recognize the total estimated contract cost, total estimated contract revenue, and total estimated contract cost that day. Okay, that is the point number B. But understand when how much cost is incurred. So what we cover in the cost incurred, now listen carefully. So simple for you. Okay. Now, what do you mean by the cost incurred? What covers in the cost incurred till date? Material consumed. But remember that here, if any unused materials that we purchase the material during the year, but which is unused, we have not yet used that material. So it means that is not expense for current year, that is expense for the next year. Okay, like a closing stock that year. Okay, so material consumed, so material purchase minus unused material at the end of the year that year. Okay, now the labor cost will add in them, labor cost. Okay, a subcontract cost. What is this subcontract cost? Certain time. Contractor also subcontract the work to someone that, okay. So that is we have to pay to the subcontractor that time. So there is cost for the contractor. Now any other cost incurred, example that other contract cost which is directly attributable to, for example, higher charges of plant, okay. And if any sale offered scrap, if any, that should be deducted from the total cost. Okay, so miscellaneous income that should be deducted from the total cost that year. Okay, so this is the cost incurred till date that year. Okay, now it is very important that year include all costs incurred on the contract till date, whether paid or outstanding. It doesn't matter that it is not necessary that it should be paid. Not necessary. We follow the accrual system of accounting. It might be paid or it might be payable that year. But even though it is payable, that will be considered as the cost that year. Okay, now and work, whether it is certified or not certified, it doesn't matter that year. Okay, it might be I don't know that year, it might be in your costing subject that year. You know that what is work certified, what not certified that year. But understand, work certified and not certified means it is certified by the engineer, okay, that year, or who has the authority to certify the work, that they're certified. It doesn't matter. It doesn't matter whether the work is certified or not certified that year. It doesn't matter whether the expenses has been, this cost has been paid or payable that year. That whatever that here cost paid or payable till the date means at the end of the year, that will be considered as the construction cost which has been incurred. Incurred does not mean paid. Incurred means paid or payable, but that we have received the services that year. Okay. Now, so here what happened? This is the cost that we have incurred till date. Now this is a point number, this point here. Okay. Now what happened? Any further estimated cost I will add, and this is the total cost. So we calculate two things: total contract revenue and total contract cost that here. Okay, now I'm coming to point number C that here. So there are different methods to find it out how much percentage of work has been completed, but ICA will ask you only by one method. Only by one method. Okay, now understand that. The first method is that here now. First of all, the calculation of percentage of completion at the end of what? Each year. So they say first method, determination by comparing the cost incurred with total estimated cost. So this is the method which is asked by the ICA that here. What is the formula here? Total cost incurred. Suppose that here total the cost incurred, if I say that is let's say the 6 crore, and further cost I'm expecting that here the 4. The total estimated cost is 10. So how much work has been completed on the basis of the cost we have incurred? How much is the cost we have incurred? That is 6. So I will write it down here 6 that here. Okay. Now they say divided by actual cost incurred 6 plus further estimated cost, that is 4. So I will plus 4. Multiply by 100, that will come here, in my case 60%. So 60% work has been completed. So we are finding out the how much percentage of work has been completed on the basis of, okay, we are finding out the percentage of work has been completed on the basis of on the basis of cost incurred. So cost incurred divided by the total cost means cost that we have already incurred plus estimated future cost multiplied by 100, and percentage will come that here. Okay, this is one method, and this is the most important, and I say always is going to ask the question on these methods only. But there are some other method which is recommended by accounting standard 7. There is survey of work performed. So we can call to someone who survey, the architect, okay, or to the civil engineer, or the physical completion. Out of 5 floors, 3 has been completed. So you can say that 60% work has been like that here. Okay, but ICA will never ask you that. The ICA will always give the figure of how much is the cost incurred, or I'm going to say we have to calculate the percentage of work completed on the basis of what? The cost incurred. So remember this formula: cost incurred till date divided by cost incurred till date plus further estimated cost multiplied by 100. Now, very important point. The first, in the point number A, we calculate the total contract revenue. Point number B, total contract cost. Point number 3, how much work has been completed. So, like that, how much work has been completed, we have to calculate at the end of each year. Now, I'm coming to the point of how to recognize the revenue in the books of account, and then cost and the profit. Now, please understand this very important point. This table is very important that here. Okay. Now, what happened that here now? When you calculate, now first understand, before I come to table, one very important point is that you have to understand that here. So when I say that, suppose at the end of the first year, suppose here, the 40% work has been completed. How much work has been completed? 40% work has been completed that year. Okay. But by the same formula, I will find it out. When I come to second year, that is same formula I will apply. Second year, it is coming that year. Now, suppose if I say that here now, that is 65%. Okay. How much it will come? Okay, 65% that is. Okay. Now, third year, 100% work has been completed. Now, please understand, this is the most important. When I say 40% work has been completed at the end of first year, when I come to at the end of the second year, 65% work has been completed. What does it mean, 65%? That is on a cumulative basis. This 65% is not specifically for the second year. 65% means basically by the end of the second year, the total work which has been completed is 65%. And when it's come to the third year, by the end of the third year, the total work which has been completed, that is 100%. So 100% is not exclusively for third year. That is that till the end of the third year, the 100% work has been completed. When it's come to second year, that 65% is not for the second year. Okay, that is by the end of the second year, 65% work has been completed that year. Okay, so but when we talk about the recognition of revenue that year, we have to recognize the revenue specifically for that one particular year. So this table will help you that here. Now, always you have to prepare this table. Easily you will find it out the answers there. Okay, now understand this point here. So what happened that here now? It says, understand this, year one. So they say cumulative revenue till date means whatever is the total amount of revenue that year, we just have to multiply the percentage of completion. In my case, it is 40%. So I will multiply the total expected revenue, multiply by the 40%. As this is the first year, so no need to recognize the revenue because we have revenue which we have previously recognized. So we have not recognized any amount of revenue previously because this is first year. So this is the revenue of the first year that year. Okay, this much of percentage of work has been completed by the end of the first year. It belongs to first year only because this is first year. Okay, we have not recognized any revenue in past that year. So this is the revenue. Then here the cost incurred till date, as it is the first year, so we have not recognized any cost earlier. So we are not going to deduct anything. So here the profit, the cost, the total cost recognized. So now here the profit, point A, revenue minus cost, that is the profit for the first year. Now the twist will come in second year. Here when I say the total revenue multiply the percentage of completion. So here I am multiplying the total revenue with the 65%. And that 65% is not the revenue for the first year. The 65% is the revenue for the first and second year. But if we find it out, the revenue for second year only, so we have to deduct the revenue of first year. So what I will do that here now, this revenue will be deducted for the first year here. You got the point? Now I will say whatever the cost incurred till date that year. But this is cost incurred of first and second year. So whatever the cost of the first year, we will deduct here. You got the point? So here, this is the revenue for the first year. This is the revenue for the cost for the first year. Sorry, second year. This is a revenue for the second year. This is a revenue for the, cost for the second year. So revenue minus cost, that will come the profit. Okay. My mistake. It's a, okay. It might be lost. If it is lost, then it will become negative. Okay. So here, this is what the revenue for the second year, cost for the second year, then the profit will come. Now, when I come to third year, this revenue is going to be multiplied by the 100%. It means this is the revenue for all 3 years. So we will deduct the revenue till the second year that we have recognized earlier, the revenue or the cost till the second year that we have recognized earlier in first and second year, and here the revenue for third year and the cost for the third year, and what is going to happen, the profit will come for the third year. So these table, okay, remember this table will help you to find it out how much profit should be recognized in each year. Okay. Now, they may ask you that here to prepare the profit and loss account. That how to prepare the profit and loss account. Remember one more thing very important that here, if a contractor has 50 contracts, suppose, they have to prepare this contract P&L account. That's a different thing. At the end of the year, he's going to prepare the P&L account, a combined P&L account. I'm talking the contract P&L account. So he has to prepare separate P&L account for each contract that year to find it out in which contract he's making a profit or loss that year. Now understand that. So whatever revenue is that year. So for example, this is the revenue for the first year. So he will recognize the revenue for the first year. Okay. Now this is the cost for the first year. He will recognize the cost for the first year. Now this is the profit for the first year. He will recognize the profit for the first year. If it is negative, then it is a loss that year. But you will say, okay, we understand this, but what is this here? Provision for the expected loss. I will tell you that here. What is this provision for expected loss? I think it will come. Yes, in next point it will come. I will tell you what is the provision for expected loss that year. Okay, but you understand. First, you have to prepare this table. Now here in these years, I will recognize in second year this much of revenue, this much of cost, and this is profit will come that year, either profit or loss. But what is the provision for expected loss? I will tell you that here. Okay, you understand? This table will help you to find it out the figures. Then question is very simple that year. Very simple. All accounting standard is very simple that year. You are going to score easily through this revision series more than 60 marks. That easily you're going to score that. Just listen me and follow what I'm saying. Okay. Now I am coming to the next point that here. Okay, we'll discuss that here now. The point number 8. What it says that here now? They say total contract cost which is expected exceed the total contract revenue. So do you remember that here? In point number B, we calculate the total contract cost here. In point number B, we calculate the total contract cost here. So if my total contract cost is going to be more than total contract revenue, we have to recognize the loss immediately. For example, if I expect the total, the contract cost is going to be, suppose here, the 10, let's say the 10 crores that year, but total contract revenue, suppose 9 crore. It might be happen that initially we have done some wrong. I mean to say, I estimated the contract cost is going to be obviously lower than the revenue, but suppose additional cost incurred, or something is not went as we have planned earlier that year. So suppose that here and later on, if I'm expecting the total contract cost is going to be more than revenue, suppose the contract cost we have there is 10 crore and the revenue suppose 9 crore. So we have there's a loss of 1 crore that year. So they say we have to recognize the loss immediately. We cannot say that here. No, we cannot give the excuses that here. They say recognize the loss immediately. This is also very important that here. I see asked it so many times. Immediately, if the total contract costs are expected to exceed the total contract revenue that here now, regardless of profit, expected profit, we cannot say no, here in this contract there is a loss but there is profit in other contract. No, we are going to find it out a profit or loss on contract basis that here now how much work has been done. We cannot say no, only work, just now the work has been started. No, if you think that the total expected the total estimated cost is more than the total expected revenue, we have to recognize the loss immediately. Or contract completion, you cannot give an excuse that only 40% work has been completed, the 60% has to be done, so it will become no. If you think the total estimated cost is more than the total expected revenue, recognize the loss immediately that year. Now that is the comes here the provision point here. Now what happened that year? Suppose if I say that, because here you recognize the revenue for the first year, any one particular year, you recognize the cost for the one. This loss will come for the 1 year only, for only that particular year, whatever, first, second, third, whatever. The loss will come only for that particular year. But the certain loss which is going to be happen in future that year, that has to be recognized that year. Okay, so that is the provision that year. Okay, suppose if you have recognized only, let's say the total loss example, this 5 crore is good, total expected loss 5 crore, I have recognized only 3 crore. Okay, so I have to make a provision for 2 crore, so my total loss will come to 5 crore. So whatever loss is going to happen in future, that has to be recognized now. You know why? Due to what? Conservatism approach that is. Okay. Now, dear student, we'll come to the point number 9. It is not at all difficult. It is very simple. Okay. Now, after this, we will discuss about that, what the question as well. That, yeah. Now, point number 9, it says that, miscellaneous income like the rental, surplus, material sales, okay, any miscellaneous income, that scrap, that we have to deduct from the cost that year. Okay. Point number, uncollectible contract revenue is nothing but the bad debt. If uncollectible or uncertainty arises, uncollectible amount is expense. Expense means what? I will treat it as what? The bad debt here. I will treat it as what? The bad debt here. Now, we don't adjust into revenue. Obviously, bad debt will go to on debit side of profit and loss account. Now, this is very important that is combining and segmenting that is. Now, please understand this point here. What happened that when we talk about the combining and segmenting, it means that whether different contract, I have to club it or I have to treat it separately, depends that there are certain conditions. But why it is important that here to decide if I'm doing the 4 type of work, whether these 4 type of work is a part of the one contract only, or these 4 type of work are the 4 different contracts here. So why it is important that to find it out, the reason is that here now, because when we prepare as per the accounting standard 7, when we prepare the contract P&L account, every contract we prepare contract P&L separately for each contract that year. If 4 type of work I am doing that, if I'm treating the 4 different contract, I am to prepare 4 different contract P&L account. If I am thinking no, they are the only part of the one contract only, then I will prepare for those 4 type of work only one contract P&L account. So that is why it is important to find it out whether it's a combining of a different type of work as a one contract, or a segmenting means a different, or these are the different contracts that's here. So there are certain conditions that has to be fulfilled to find it out that. Let's start it. What it says that when it comes to segmentation, that is segmentation with different contract. If these 3 conditions are satisfied, we are going to call them a different contract. First is what? A separate proposal. So for example, that I got a contract from the Indian oil company that here to do the construction of petrol pump that here. So there are 4 petrol pump. Let's say A, B, C, D. What does it mean that here? The 4 A, B, C, D that here. So I am giving the separate proposal for each contract. So even the Indian oil company, they offer, I apply for the construction of these 4 petrol pump that year. But I have given the 4 different proposal for each of them. Okay. Now, separate negotiation and acceptance and rejection by both the contractor and contractee. When I'm negotiating that how much should be the revenue for all these 4 contracts that year. So it's a separate negotiation for each of them separately that year, and both the contractor and contractor, they have the right either to accept it or reject this negotiation, this proposal that year. And this is separate cost and revenue of each. I mean to say each petrol pump in my example can be ascertained, can be identified that year. These 3 conditions are satisfied, then we call them what? A segmentation that year. Separate proposal we have submitted for them, separate negotiation we have done that, and separate cost and revenue can be identified for each of them. If all these 3 conditions are satisfied, then we call them a separate segmentation. Okay, different contract. We are going to prepare the different, we are going to find out separate revenue, separate cost, separate percentage of work completed, separate profit for each of them that is. Now, I am coming to this point about combining. It will be considered as one single contract. They say when. Let me give an example. Suppose there is a contract with the construction of a residential building that year. So this is a residential building that a contractor is going to do the construction of this residential building that year. But they say that here now we have to do the construction of swimming pool also that year, the parking here that year. There's some the amusement. Okay, here, so the park is also there. So they are the part of one single. Now understand whether these conditions set here. Negotiating as a single package. So I will do the construction of this building along with swimming pool, parking, okay, and the parking area and the amusement here. The park also is there. Okay, then this is a contract closely interrelated. They are interrelated to each other. I mean to say the building, the parking is interrelated to that here. Okay, and forming a unified project with an overall profit margin. So when I code them, all this is going to cover in that the construction of buildings, swimming pool, okay, and the parking, the park, and contract performed concurrently or in continuous sequence. Means simultaneously we are doing it, or one by one after each of them we are doing that here. If these 3 conditions are satisfied, then these are not 4 contract: building, parking, and then here the park, and swimming pool. These are not four contracts. They are interrelated that here. As a single package, we negotiate with them here and they are connected to each other. It will be considered as a one single contract. Here, this petrol pump will be considered four separate contracts because separate proposal, separate negotiation, separate cost and revenue can be identified. Okay, the last one, disclosure, that is, this is also important. That generally disclosure is not so important, but in AS7 it is important because IC asks that. Understand one by one. We have to disclose the total contract revenue that should be recognized in P&L account. Sorry, how much revenue, total contract revenue that you recognize. The method to determine the completion. So generally, I say ask you one method only, to the cost incurred method, but survey method is then the how much work has been performed. That okay. The advance, what is the advance? Work has not yet been done, but for still we have received amount. We received the amount for which we have not done the work. This is advance received. Retention means the work has been done. Work has been done, but certain amount not paid by the certain amount not paid by the contractor. So basically, customer pays the less amount of the bill that we have raised. Suppose we raised the bill of 10 crore. He paid me 9 crore. So 1 crore is what? The retention. Now this is important. They may ask you the gross amount due from or to customer. Due from or to customer is calculated as provided formula that here. Okay, now understand from or due. So these formulas you have to keep in mind that they ask this point number E especially, that how much is the gross amount due from or due to customer that here. If it's due from asset, due to, then it's a liability. Okay. So just you have to first write in the how much cost you have incurred till date, how much profit that you have recognized, and if you have any loss that you have recognized, deduct the loss and minus progress billing. Now progress billing is important, that you have received or to be received. To be received means we have raised the invoice, but amount might be not yet received. So progress billing is the amount that we have raised that year. Okay, with the not amount, the bill that we have raised that year. Okay, it might be received or it might be to be received that year. Okay, that we have to deduct that year. If this amount come positive, then it's a positive. If it is coming positive, the gross amount due from customer. If it is negative, this gross amount due to customer. That's a liability. Okay, first is asset, second is liability. So this is important. So this is all about accounting standard 7 that we have done the revisions. Remember that these are the steps: revenue, cost, total, then the percentage, then the recognition through that table, and then we are going to prepare the profit and loss account if they ask you in the examination. So what we'll do that now, we'll go to our super 100 question that here, and the on AS7 we have the question from the question starting from 22. Okay, now come to question number 22. Now they say that here now, a Macy's highway construction undertook the construction of a highway on 1st of April 2013. The contract was to be completed in 2 years. The contract price was estimated rupees, how much? 150 crore. So how much is the total estimated revenue that year? 150 crore. Now, up to the 31st March 2014, the company incurred 120 crore. So when we talk about the cost, we have incurred 120 crore. So we have already incurred how much here? 120 crores. Okay, then it says that here the engineers involved in the project estimated that a further cost of rupees 45 crore would be incurred to complete it. So to be incurred, or you can say the further cost, that is how much here? 45. So total cost is going to come 120 plus 45, that is coming how much here? 165. So this is total estimated revenue, this is total estimated cost that year. They ask us what amount should be charged to revenue for the year 13-14 as per the provision of accounting standard 7, that is construction contract. Show the exact extract of the profit and loss in the books of Mrs. Highway Construction. So what is going to happen that here? I have a loss here. So there is a loss of 15 crore that here. So do you remember that, as I told you that here when we were doing the discussion that here, the total contract revenue, total contract cost, if it is more than the total contract revenue, we have to recognize the loss immediately. So how much is the loss? 15. Okay. You can see that 15 is the loss. But how to recognize that? First, we have calculated how much is the total loss. So revenue is already given there. So if I say revenue, this is point number A, point number B that here now. These are the total the loss we have. Now point number 3, C, will calculate the percentage of completion. So cost incurred till date is 120. Total cost incurred 120 plus further cost 45 multiplied by 100. Okay. Step number C. So 120 divided by how much it will come? 165 multiplied by 100. That is coming 72.72773%. This work has been completed. Now point number D that here. Do you remember the point number D? Okay. So total revenue. Okay, total revenue. I'm to recognize that here. So total revenue is how much? 150 multiplied by the percentage of work has been completed. 72.73% that here. Okay. So I will say that here. 150 multiply 72.73%, that is coming 109.95, let's say 10. Now I will deduct from what? There is no previously recognized revenue. So I will recognize here what? The cost here. So how much cost that we have? Total cost is 165. But if you calculate the 72.73%, that will come 120 only. Okay, so here the 120. So I have the loss for this year. Loss for this year, how much? 109.10 minus 120. That is coming 10.9. This is a loss for the 1 year only, first year. But total expected loss is how much here? 15. This is a loss for the 1 year. So for the remaining amount, we have to recognize, we have to create a provision. Suppose if they ask me to prepare the P&L account, how I will prepare the P&L account? I will write it down. When they ask me to prepare the profit and loss account, what I will do that here now, they are saying that this is the total contract revenue. The total contract revenue is how much here? 109.10. This is the revenue that I have. Total contract cost is how much? 120. So I have a loss of how much here? 10.9. Okay, so I will 10.9. So I will forward this year loss of current year. Loss for current year 10.9 that. Okay, now please understand this point. What happened that year now? Okay, 10. Okay, what happened that year now? But I will say that the total loss I have to recognize 15. So I have to create a provision. So provision. So how much provision? Total loss is 15. We have already recognized 10.9. So we have to recognize the remaining 4.1 as a further loss that year. So total loss balance will come 15 here. So this is the loss for the current year 10.9. The further loss we have to recognize 4.1. That is in the form of provision. That is 50. This is how we prepare. If this type of question comes for 7 marks, you scored 7 marks. That is so simple that is. Okay. So remember the step. First, you will find it out the total revenue, then total cost. If there's a loss is coming, the cost is more than the revenue. Okay, we'll recognize the provision. Third step, how much work has been completed. Fourth step, the table you are going to prepare. These table. Point number D. These table that here. And then if they ask you to prepare the fifth step, that is the P&L account. We got your 7 marks. Simple. Okay. Now here I'm coming to question number 23 that here. Okay. Now I have already, do you remember this table that here? We will prepare in, I can write it on the figures also. Okay, let me write it down here only. Okay, to understand that here. They say a construction contractor has a fixed price of rupees 9,000 lakh to build a bridge in 3 years time frame. A summary of the sum of the financial data is as under. Okay. Now they say the initial, now 3 years, 1, 2, 3 that. Now listen carefully. Initial amount for, there are some figures. Okay. Now this is for the first year. This is for the variation. Okay. Sorry. Third and okay. You can do the correction there. Okay. So initial amount for revenue in contract is how much? 9,000. Is there any variation that year? No variation in first year. Now contract cost incurred up to the reporting date. This is the cost that we have incurred that year now. Now estimated profit for the whole contract is mentioned. Or the whole contract is mentioned that year. Okay. So we'll go step by step. Don't worry. The second year, 9,000 total estimated initial amount is 9,000 only. Then they say how much is the variation. The variation is there the variation. So increase in the revenue second year. So first year we were not expecting for the variation. Variation that come in second year. So let's go year by year only. Okay. The second and third year I will come later on. So what is the first step? Total contract revenue that year. So let me write it down here. Okay. Now listen carefully. I will write it down that here. The total contract revenue. Okay. No. But before that here, what is the most important thing is that here now, total contract revenue is okay, 9,000. That is okay. The total contract cost, I will come to that point. But what is important, how much work has been completed that year. Because when you prepare this table that here, you should know how much work has been completed. I will come to this table, but listen carefully that here. So how to find it out how much work has been completed that year? The same formula, cost incurred, further cost divided by cost incurred plus further cost multiplied by 100. But in question, they have not mentioned how much cost incurred. They say cost incurred to contract cost incurred up to the reporting date. Okay. Not up to the reporting date that they have mentioned that here. But how much is the further cost that year? Okay. It is not mentioned in the question that year. I mean, the total cost is not mentioned. This is the cost incurred at the end by the end of the third year, by the first year, second year and third year. I want to find it out because when I calculate the percentage of work has been completed, cost incurred divided by cost incurred plus further cost. So I need a total cost basically. Okay. So that is not given in question. We can find it out. I will say the total revenue is given that here and total estimated profit for the whole contract there. Okay. So total revenue minus revenue minus profit, that will be cost. If I want to find it, the cost is equal to revenue minus profit. Simple that, revenue minus profit that here. So how we can find it? The working note is given. So revenue for the first year is how much? 9,000. Not for first year. We were expecting that the total revenue on in first year, we're expecting the total revenue will be 9,000. Estimated profit is 950. That is the total estimated cost that year. How much cost we have incurred till the first year? That is 2093. So 2093 that we have incurred till the first year that year. Okay. So percentage is there 2093 divided by, here this is the total estimated cost. Okay. So 805 in 80 total cost incurred till date and further cost already is there. Okay. Multiply by 100. So this much will come. Now when I come to second year, I was not here we expect the total, there's a variation. The total revenue will be not 9,000, 9,000 plus 200. So that will come how much here? 9,200. So you can see 9,200. How much is revenue we're expecting now for the whole contract is how much here? 1,000 that here. So I will minus here the 1,000. How much it will come? 8,200 is the total cost. But to how much cost we have incurred till the second year? 6,168 that year. But it is mentioned that there was yes, star. What it say? Include rupees 100 lakhs for standard material stored at the site to be used in the third year. It is unused material. So that is not a cost for the second year. We are going to use in third year. So that will be part of the third year. So that's why we deducted from the cost incurred 6,168 minus how much is 100. That will come how much is 6,068. So here I will calculate that here now. That is 6,068 divided by 8,200 multiplied by 100. That is coming how much is 74% that here now. Okay now. Now I'm coming to the third year now that here now. Okay. What is the third year that here now? When I come to third year that here now, the total revenue again that we are expecting 9,000 plus 200, that is coming here 9,200. Total cost that we are, total profit we're expecting till for the whole contract in third year 1,000. So how much is the total revenue? 8,200. How much cost we have incurred in the third year? 8,100 that here now. No. This is the total contract revenue minus profit. This is the total estimated cost. This is okay. So how much cost we have incurred till third year? 8,100. Okay, but the cost that we have incurred the previous, this 100 that year, if we deduct it from here, that it will add to the third year. So we'll add here 100 here. Okay, not because this is the unused for the next second year that will be used in the third year. That's why we add here. The total cost. So how much work has been completed? 100%. The first year is 26. By the end of the second year, 74. Third year, 100%. Now the work is E4. What we'll do that here now? We'll write it down one by one. So how much work has been completed here in our example now that we have solved here? So 26%. Correct. How much? 74 and 100. 74% and 100% that here. Okay. Now one by one. So how much is the revenue that here? First year we're expecting that your revenue when we talk about 9,000 that year. Okay. So when we talk about the revenue that year, 9,000 here multiply the percentage. How much work has been completed? 26%. Multiply by 20. That is coming 2340. So 2340. No revenue recognized earlier. So 2340. Okay. Cost incurred. So how much cost we've incurred? 2093. So 2093. No previously cost recognized. So here 2093 will is total that here. Okay. So here 2340 minus 2093 that is. That is coming how much here? 247 that here. So here 247. Done. Second year. How much is that revenue that here? Second year till that year. Then we are expecting how much? 9,200. But how much work has been completed? 74%. So 9,200 multiplied by 74%. That is coming 6808. Now how much revenue we recognize till first year? Previously I means that is 2340. So 6808 minus 2340 that here. That is coming how much here now? 4468. How much is the cost that here now? Till the end of the second year? 6068. So 6068. How much you recognize previously? That is coming 2093. So I will write it down 2093. Okay, 2093. So 6068 minus 2093. How much that is coming? 3975. So 3975. So here 4468 minus 3975. So 4468 minus 3975. That is coming 493. Simple. Now third year that here. How much third year is the total revenue? That is 9,200 multiplied by 100%, 9,200. How much we recognize? 9,200. How much you recognize earlier? 6808. So 9,200 minus 6808. That is coming here. How much here? 2392 that here now. Okay. How much cost that here total? Is the 8,200. 8,200. How much we recognize earlier? This much. 6068. So 8,200 minus 6068. That is coming here 2132. So total revenue 23. Total is the revenue of third year 2392 minus cost 2132. That is coming to 60. Now see the magic here. 260. If you go to the table that here now, these are the answer. First year, second year, and third year. 247. You can see that here now. 247. Okay. Remember this. Prepare in the manner that this table that is given the repeat this. Okay. Now here 493. 493. And for the third year is the 260. So you can see that for the third year 260. 260 done. 7 marks is yours. Okay. Simple. Okay. Now the last question that here now, understand that now. They say PRZ and companies, PRZ and Sons Limited are heavy engineering contractors specialized in construction of dams. From the record of the company, the following data is available pertaining to year ended 31st March 2012. Using these data and applying these relevant accounting standards, you are required to compute the amount of profit or loss for the year ended 31st March 2012. Now understand this point. What it says that here, compute the amount of profit or loss. I agree that here, to find out how much the profit or loss for that particular year, first we have to calculate the how much percentage of work has been completed that year. Okay. But what happened here in this case, here in this question, not necessary, because the total expected loss is, total expected cost is more than the total expected revenue. So there is a loss here. In case of a loss, we have to recognize the complete loss that year. So they are asking only not to prepare the P&L, just they want to how much profit or loss that year. Okay, anyways, I will come to that. Now they say how much is the contract work in progress. There is a cost incurred till date, and they determine the amount of revenue to be recognized. So then revenue that here now, an amount due to or due from. So do you remember that as I told you that here, these disclosure are due to or due from, these steps that here. Okay. Now, okay, they say total contract price is 2,400 crore. Work certified 1,250, work pending certification. Okay, this one. So both, I mean to say this work certified, not certified doesn't matter that here. How much we have certified? 1,250 plus 250 not certified. So that is 150. So cost incurred is not given. So we will assume that this is the cost that we have incurred, that is 1,500. Estimated further cost is how much? 1,750. Okay. Stage wise payment received. We have payment received 1,100 that here now, and the progress payment in pipeline. It means this is received and this is to be received. Received amount and it is to be received. Do you remember that I told you that when we calculate that a due to or due from, at that time we have to take into consideration receive and to be received, both of them one by one. So how much the profit or loss for the first in case loss, I tell you why. The total revenue is 2,400. Step number 1 in our case. Step number 2, the cost incurred is this 1,250 pending plus certified 1,250 pending is 250. That is coming 1,500 plus further cost 1,750. So 1,250 plus 250 plus here how much here 1,750. That is coming 3,250. So we have a loss here 2,400 minus 3,250. That is coming 850. So we have to recognize the loss 850. I agree with you. The loss for this particular is not 850. We have to find the percentage of work has been completed, and that much is the loss for that particular year. But they say how much the total loss, because in case of a loss we have to recognize the provision as well that year. So you can see that here the 850 loss that we have to recognize that here. Okay. Now the second they ask that here the work in progress and how much cost that we've incurred till date. That is a 1,250 plus 250. That is coming how much? 1,500 that year. 1,500. Then they say percentage of work. I'm to say how much revenue should be recognized. So A point is the revenue that year 2,400. B point is the total cost that is how much? 3,240. Correct here? No, not 3,240. 3,250. Sorry, 3,250. Now C point, work has been completed. How much cost we have incurred? 1,500. Total is 3,250 multiplied by 100. So 1,500 divided by 3,250 multiplied by 100. That is 46.15%. Okay, 46.15%. So 2,400 multiplied by 46.15. That much revenue we have to recognize. Then they say due to or due from. How we calculate that here? Cost incurred. How much cost we have incurred till incurred? Cost incurred. How much we have incurred the cost? 1500 plus how much profit recognized? That is 0. How much loss recognized? That is 850. How much bill raised? The amount received or to be received? The amount received is how much it is given in question that here 1100 or to be received is 300. So 1100 and the 300 as well that here. So here it will come that here 1500 minus 850 minus 1100 that here now and minus 300, that is coming how much is 750 negative figure due to liability. Okay, so this is all about accounting, almost 1 hour. Okay, so this is all about accounting standard 7 that here. That is for today. Take care all of you, and if you like this, if you want to say anything this here, please drop your message in comment section. That is for today. Take care all of you. Bye bye.